Hi, this is Joseph. It is Thursday. It's August 5th. Stock market's just about ready to close in about 13 minutes. So I wanted to take a moment here to create a special video to show you what you could expect on a slow trading day. I know I refer to these sometimes in the videos. In the previous videos, I talk about how much money you could potentially make with a trade copier. Again, it really depends on how much money you have available in your trading account. So for example, I'll go through it really quick. If you're trading a standard lot, earning approximately $10 a pip, yesterday there was one trade, I believe it paid 33 pips. So if you're earning $10 a pip, you're trading a standard lot. If I execute that trade for you and I manage it and we earn 33 pips on that trade, and again, yesterday was a relatively slow day, that's $330 on a standard lot. So that's not bad. On a busy day, I could earn well over 50 pips, 80 pips, 120 pips, even 200 pips. It really depends on the trading opportunity. There are several days out of the month that I can earn about 180 to 200 pips on a single move with the pound dollar, but it doesn't happen every day. So just to give you an idea, I want to show you the comparison. There's videos on the YouTube channel that show that particular trade on the pound dollar that earned, I think it was just over 210 pips. It was right around there. So again, on a standard lot, that'd be well over $2,000. Now, if you're trading a mini lot, we're earning $1 a pip. That that 33 pip trade is going to pay you $33, which isn't bad, not for a single day. And if you're earning about $1 a pip on a mini lot, but again, if on those days or those months where I'm closing in on about 1,000 pips profit for the month, that could be $1,000 on a mini lot earning $1 a pip. That's not bad either. So again, it's relatively cost effective. You just have to be paying attention to how much money you have available in the account and be well aware of the leverage, the margin, all of that, so that way you know exactly what lot size to use when you execute, or when you have the trade copier execute these trades. So again, I manually execute each one of these trades. So this is the euro dollar. I want to show you what today's trading activity looked like. And I didn't get any signals here on the euro dollar. This is my point and figure chart. I also get a lot of questions about my point and figure. How do I do it? How long have I been using it? Is it effective? Does it work? Yes, it works every single time. Now, one of the keys I'm not going to get into turning this into a trading lesson, but I just want to share with you that one of the keys in mastering using point and figure for trading, especially for day trades, you want to know which signals to avoid, which ones to ignore. And you'll hear me talk about quite a bit that my analysis starts off with a bar chart or a candlestick chart, and then once I've figured out the ranges of consolidation, whether I'm in a phase of reaccumulation or redistribution, or distribution or accumulation, either way, whatever direction I'm trading it in, once I've figured that out and I've analyzed the phases of consolidation, I then go over to my point and figure chart and wait for an entry. Now, if my bar chart or candlestick chart shows that the euro dollar is inside a consolidation, these little X's and these columns to the upside, they're breakouts in a sense above a clear level or a clearly defined level of resistance, but I know to avoid them because we're still trading inside of this range from yesterday. This trading range right here from yesterday, you can see how it made this immediate drop, turned around and went right back up, and then turned around and came right back down again. That is consolidation. That's setting in that whole range for sideways activity. So if I'm going to trade it back up, it better be a true breakout. And in this case, it was not a breakout. So then I just simply wait for it until I get a better opportunity. But let me show you what it looks like on a bar chart. So this is my euro dollar bar chart. This is a 60-minute time frame, and you can see that move to the upside, actually the drop first, and then the move back up to the upside, and then the immediate sell off again. This was yesterday's price action, and then it starts to go sideways here. Now, I don't see any clear opportunities, even if these were candlesticks. Again, there might be some bullish and bearish candles in here, but this is a clear level of consolidation at this point because of this reaction. I see this all of the time. I've been trading for 20 years, and when I see moves like this, it clearly means that something's going on here. There's a lot of confusion. A lot of people get burned on these moves here. They're trying to, for example, if they're going long, they get stopped out, and then they try to recover some of the losses, so they turn around and go you're short, and then they get stopped out here because it reverses, and the whole thing just keeps repeating. You can see how many times it happened in here, and then it happened again a couple of times this morning, so I just stay out of the way. This is not a clear range of or some kind of a breakout. This is definitely a clear range of consolidation. I would avoid it at all costs. I don't have any trade signals in here. And again, it really comes down to knowing which signals to avoid and which ones to be paying attention to. But with this kind of behavior, you can definitely count on the reaction of most traders and how they participate and how they trade during the day. And you can see a lot of losses and the attempt to try to gain back some of those losses and earn them back quickly, and then sometimes it just accelerates the losses and just makes it worse when you just keep jumping in ranges like this when there really isn't a valid signal. signal. So I would recommend, again, staying out, but this is how I trade with the trade copier. This is how I trade from my own personal account. Every trade that I execute with the trade copier also is the same trade that's going into my own personal account. So if I want a winning trade, you're going to get a winning trade. I want every trade to be a winner trade, or I'm not going to execute a trade. Let me go back to the point and figure. So again, I'll leave it here, but there's also volume and things that I'm also monitoring at the same time with another chart that has the bar chart with volume. I have volume at the bottom, and so that way I can determine if this is going to be some kind of a reversal and a bounce, and it's going to be significant for me to expect it to reach some kind of a target. I've got to see things lining up. There's a lot more to it than just what I showed you here with that previous bar chart. I usually use volume on the bar charts. I'm counting the waves as we go into support and resistance, so it's just going to be a little while longer for me to wait this one out and look for an opportunity. Now, it doesn't mean that every single currency pair is going to trade like this. You probably are looking at some of the currencies this morning, and there are a couple of little opportunities, but they're very short-term opportunities. And I've got to be very, very specific when I get into these trades because, if I don't have a target, I'm not taking the trade. Point and figure is not only going to give me a precise entry, but it's also going to give me a target based on the the range of accumulation or distribution, the columns, the count, the data that I have on the chart. Here, again, there just isn't any trading opportunity. So the reason that I presented this information to you today is to share with you that there are some days where with some currency pairs, I don't have a trade signal. And I get that question quite a bit. Do you have a trade every day? How many trades do you have per day? This would be one of those days where it'd be relatively flat or quiet or slow, and I wouldn't get any trade signals here on the euro dollar. And for good reason, because a lot of people are losing a lot of money today and yesterday trying to trade inside of this really choppy range of consolidation, these wild, wicked price swings that go up and down. I remember trading them when I first started trading back in 2001. I would trade when I would see price moving around like that, and I would get stopped out left and right. Every time I made an attempt, I didn't know when to stay out. So again, you learn over time how to stay out, how to avoid certain signals that are false signals, and you wait for the better trade selection. So that's what I'm doing every single time, avoiding making mistakes, avoiding having losing trades. I want every one of my trades to be a winning trade.